All right, we got gold holding firm, but not showing as much strength as it might given its current technical positioning. But before we go further, a quick word from our sponsor. This video is brought to you by XAU, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for gold. So we have a bullish continuation in gold that triggered last Friday, and then a new trend high for this rally right here from the October low of 4,264 was reached, but it couldn't be sustained. It couldn't sustain a close above the prior swing high here. And now we have some consolidation and a pullback that occurred all this week around support of this top channel line, this blue line here, and that channel line is a real long-term channel line. Just to go back for those, it's this parallel, the lower line's down here, and the top line is up here connecting this 2011 high. So that's a very long-term channel line, which normally I wouldn't pay much attention to, but if we look at the behavior recently, you can see that price seems to have recognized it. Support here, resistance, 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 support, resistance, resistance, support, support, support. So that 5-day low of 4,164 can be used as a proxy for the trend line, or the top channel line, which is what it really is. And we have the 10-period moving average, dynamic support of 4,185. That's key dynamic support, and you can see it was exceeded back here a week ago Monday, and this is the first pullback to test it as support. So it should continue to be support if this short-term trend is going to have some legs to the upside. But the key support zone is going to be down here at the 20 moving average of 4,144 currently, which is converged with the trend line, giving it added significance as a potential support line. Technically, this all looks like gold is going higher, but it needs to trigger first, and the next trigger that may have some reliability is not going to be until above this week's high of 4,264, given the chop around all this week. The low of the range is, again, this 4,164, but we have these lows right here, so it wouldn't be surprising. It wouldn't necessarily mean much if these lows are broken. The key is really going to be this 20 moving average, and gold could drop through the 10-period moving average briefly and then quickly recover it. If that happens, then that will put the dynamic support of the 10-period moving average back into play. On the upside, we have an initial target of 4,356, followed by the record high of 4,381, and then a 127% projection of this measured move here at 4,454. But we got to see some pickup on momentum, and it needs to be happening relatively soon. If we look at the previous consolidation, this one here was about 6 days sideways, and this one here was about 9 days sideways. So we're reached 5. You could argue maybe it's 6, maybe it's 7, depending on when you use these lows or not. But for now, I'm going to just say it's these 5 days. That means we could easily have one more consolidation day, and then the probability of a breakout increases significantly, with the expectation to the upside, but always being prepared to the downside to manage risk in case that does happen. All right, that is it for gold traders. Have a great weekend.